Good afternoon. Today is Monday, June 7th, 2010. This is Brian Shannon from AlphaTrends.net. The downtrend continues in this market as that 200-day moving average seems to be impenetrable, at least for now. And this pattern of lower highs and lower lows continues. We had a rough day again today, down 1.25% after Friday's bigger volume sell-off. It was interesting that it was the daily pivot, actually, that where we found resistance early on. That was something I was telling subscribers to look for. And then we broke below that volume weighted average price. There was a nice trade in there, and then it kind of chopped around midday, as it seems to quite often. And then this afternoon we had a heavier sell-off. So on the daily time frame, that puts us down again towards these lows for the year. That 104.65, I believe, was that the intraday low for the year. 104.38 rather. And it seems as though we've got an appointment to go down and at least touch that, perhaps go a little bit lower. If we take a look at the longer term chart, we could draw some Fibonacci off of the lows from March of last year to the recent highs, and you can see if we were to retrace 38.2% of this rally here, then that would bring us down towards about the 102-ish area. So when we take a look at the daily time frame, that's actually about where we have these October lows as well. So I think that 102 looks reasonable. We are still in a downtrend. There's no way to tell how much longer it's going to go down before it begins to show us some real stability. But markets correct two ways. They're correct price-wise and they're correct time-wise. Obviously, we're still in the process of the the price correction here, and we're going to need to see some sideways action before we get a longer-term idea of whether or not this time the market can turn around again, or whether we're just completely going to cave in. I'm still of the belief that we're going to get a bounce at some point in here, maybe up towards about 113. It seems quite a distance away, but before this whole thing really rolls over and dies, I think that's a possibility. I wouldn't trade off of it, but I think it's a possible scenario. Right now, the best trade is to keep your trade short term. We've got all these these gaps that really have destroyed a lot of people's positions on the open, only to see them completely reversed, gapping down and then closing on the highs, gapping up, closing on the lows, gapping up, closing on the highs. There doesn't seem to be much rhyme or reason to it, gapping down, closing on the lows, etc. So I think as I've said since we broke below that 118.50 level, that that it's still a market that's not appropriate for most traders. If you're an aggressive trader who can handle this type of risk and volatility, we're in a much riskier environment, and you should be trading smaller share size and really keeping a focus on that risk management.